The Truth About SSI, Supplemental Security Income, and Working. Created by Jeff White with Kentucky Works and Carolyn Wheeler, Kentucky Supported Employment Training Project with the Human Development Institute at the University of Kentucky. This presentation is directed to the person who actually receives the SSI payment to help them better understand that working and maintaining eligibility for an SSI cash payment and Medicaid can be compatible. If you are reviewing the presentation for a family member, please understand the "you" in the slides refers to the person who receives the SSI benefit. SSI stands for Supplemental Security Income. It is intended to supplement other money you might earn from a job or be given. The funding for the SSI payment comes from the federal treasury and out of the federal budget. SSI is an independent program of the Social Security Administration, but it is not Social Security. In other words, a person who receives an SSI payment has not themselves paid into Social Security for the benefit they are receiving. Qualifying for SSI provides a person with, first, a supplemental income, up to $771 per month for a single person, and $1,157 per month for a couple who are both eligible to receive SSI in 2019. This amount can vary from year to year depending on whether or not Congress approves a cost of living adjustment. SSI also brings health insurance through Medicaid. SSI requires payment for living expenses. SSI supplements your income so you can afford to pay your fair share of your living expenses, which would include food, housing, and utilities. If you do not pay your fair share, the Social Security Administration may reduce your monthly cash payment by as much as 1/3 of the full federal benefit rate, which for 2019 is $771 per month. Social Security's website at www.socialsecurity.gov has a great deal of helpful information about all of the programs administered by the Social Security Administration, including additional information on SSI and on working while you are receiving an SSI payment. If you have been receiving SSI as a child and you are approaching your 18th birthday, you need to read Social Security's book entitled What You Need to Know About Your Supplemental Security Income When You Turn Age 18. This booklet is available on Social Security's website. I will now point out several key points. On page 1, under the introduction, it tells you that this booklet is for youth who receive supplemental security income and their parents, teachers, health providers, caregivers, or representatives. Your SSI could change when you turn 18 as you prepare to transition to higher education and employment. If you look down where it says the age 18 redetermination, when you turn 18, Social Security will review your eligibility for continued SSI benefits based on disability rules for adults. These are different from the disability rules for you as a child. Looking on page 2 at the top of the page, it states, our disability rules for adults are different from our disability rules for children. Historically, about 1/3 of children lose their SSI eligibility following the age 18 redetermination. SSI is concerned about two kinds of income. Unearned income, which is money or some other benefit you receive without having to perform some kind of work or service. The second kind is earned income, which is money or some other benefit you receive because you perform some kind of work or service. So for purposes of this presentation, we are focusing on earned income, which is money you would be paid from a job or self-employment. I would now like to show you what Social Security says will happen to your SSI payment when you go to work. You need to obtain their booklet entitled Working While Disabled: How We Can Help. You can get this booklet by downloading it from the socialsecurity.gov website or from the Kentucky Works website. If you look at the table of contents, you will see that there's information on both Social Security disability and the Supplemental Security Income or SSI program rules. You would want to read starting from page 7. On page 14 of this booklet, it tells you how your earnings affect your SSI payments. So you can see in the middle of the page an example. So if your only income is SSI and the money you make from your job, we, meaning Social Security, does not count the first $85 of your monthly gross earnings. And then each month, we reduce your SSI benefits 50 cents for every dollar that you earn over $85. So in the example, you can see that you work and you earn $1,000 gross in a month. And your only income comes from your earnings and your SSI payment. So you can see that Social Security would subtract $85 from the $1,000, which leaves $915. That number is then divided by 2, which equals $457.50. It then states we would reduce your SSI payment by $457.50. So working means you will have more money. As you can see in this slide, when applying Social Security's formula, if you earned $1,625 gross per month, you would still receive $1 in SSI in 2019. The truth about working while receiving SSI in 2019 is an infographic that Jeff created and you can download from the KentuckyWorks.org website. So it explains that SSI provides supplemental income in an amount up to $771 per month for a single person, or $1,157 for a married couple who are both eligible for SSI, and health insurance through Medicaid. The next section shows the formula that you can work and earn money while receiving SSI. The first $85 you earn each month does not change your SSI benefit, and after that you get to keep 50 cents for every dollar earned. The third section states if your only income is from SSI and your job, when your paycheck reaches $1,627 per month, your SSI cash benefit will stop. But you will still receive Medicaid until your income reaches Kentucky's threshold amount, which in 2019 is $30,818 per year. And again, this is talked about in the Working While Disabled: How We Can Help, and is known as the 1619B work incentive. Lastly, if you earn enough money from your job to stop your SSI payment, the amount you earn at your job will not be counted when calculating any required Medicaid share of cost payment. So if SSI is your only cash benefit, you will always have more money to spend by working. Social Security also has work incentives. Work incentives are special rules which make it possible for people with disabilities receiving supplemental security income to work and receive higher monthly SSI payments by further reducing the amount of your earned income that is countable. SSI work incentives include impairment-related work expenses, blind work expenses, student earned income exclusion, plans to achieve self-support, and Section 1619B, which is about maintaining your Medicaid eligibility, even if your SSI payment went to zero. You can read about all of these in the booklet that I just referenced, Working While Disabled: How We Can Help. There is a work incentive specifically for students entitled the Student Earned Income Exclusion. The Student Earned Income Exclusion is described on page 8 of the book, Working While Disabled: How We Can Help. So at the top of the page, it states, if you're under age 22, go to school, or regularly attend a training program, we don't count some of your earnings. In 2019, we don't count up to $1,870 of your earnings a month, up to a maximum of $7,550 for 2019 when we calculate your SSI benefit. So to repeat, the Student Earned Income exclusion is available to students with disabilities if they are under age 22, go to school, or are regularly attending a training program. If that's the case, then Social Security does not count some of your earnings. In 2019, that's up to $1,870 of your gross earnings a month, up to $7,550 for the year. In other words, this means that while you're a student, your SSI payment will not be reduced based on your earned income from a job or self-employment. You may be asking, what about my eligibility for Medicaid if I go to work? Again, Social Security's Working While Disabled, How We Can Help book answers this question. On page 16, it states how long your Medicaid will continue. In general, if work income causes your SSI to stop, your Medicaid coverage will continue even after your SSI payments stop until your income reaches a certain level. That level varies with each state and reflects the cost of health care in your state. For 2019, that amount in Kentucky is $30,818 gross per year. Social Security refers to this work incentive as Section 1619B, Continued Medicaid Coverage. So, continued Medicaid coverage, the person has to be eligible for SSI, have Medicaid, and are employed with earned income. The person continues to be eligible for Medicaid coverage until your gross annual income reaches a certain amount, which is $30,818 for 2019 in Kentucky. You need to need Medicaid. That means you are using the coverage, and your countable resources are still limited to $2,000. So where can you go for help? The Social Security Administration provides benefits counseling free of charge through 2 Work Incentives Planning and Assistance Programs, also known as WIPA, here in Kentucky. So for the western part of the state, the Center for Accessible Living provides that service, and for Lexington and East, Goodwill in Lexington provides that service. You can see their contact information on the slide. Because each agency serves half the state, staff in each of these WIPA programs are typically not able to meet with you in person. The consultation would be conducted over the phone. WIPA programs do have priorities set for them by the Social Security Administration. Their priorities are to assist transition age students as well as other beneficiaries, but who themselves are very serious about work and most likely even have a job offer. If your needs do not fit in the WIPA priority model, or if you need assistance more quickly than they can provide, and your employment supports are being funded through the Office for Vocational Rehabilitation, contact your vocational rehabilitation counselor, and he or she may be able to arrange for a benefits analysis through another resource available to them. If your employment services are going to be funded through the Supports for Community Living waiver or the Michelle P. waiver, contact Jeff White at 502-782-6228 or email him at jeff.white@ky.gov. If you receive an SSI payment, you are required to share certain information with Social Security. So the person receiving the benefit or their representative payee is responsible to find out when information should be reported and how it should be reported. This can be found in the book Working While Disabled, How We Can Help. You need to report to Social Security when you go to work, what you do at your job, how much money you make, and any changes that happen. This must occur on a monthly basis. You also have to tell Social Security how many hours you work and anything you have to pay for related to your disability in order to work, as that may then not be counted and your SSI payment may in fact be greater once you leave school. SSI is a means-tested program. This means that you can only have limited resources in order to qualify for both SSI and Medicaid. So what are resources? According to Social Security, a resource is money or something you own that you can easily turn into cash. Your countable resources must not be worth more than $2,000 for an individual or $3,000 for a couple. But there are many things that do not count toward the resource limit. These include the house you live in, one vehicle used to transport you or a member of your household, life insurance policies with a face value of $1,500 or less per person, burial plots or spaces for you or your immediate family, household goods and personal effects, and property you or your spouse would use in a trade or business or on your job. In addition, money that you set aside under a plan to achieve self-support, which is a Social Security work incentive that is explained in the book Working While Disabled, How We Can Help, and funds properly deposited in a qualified special needs trust or pool trust or ABLE accounts also do not count. So there are ways for you to save money for the future and not jeopardize your eligibility for SSI or Medicaid. People whose disability occurred before the age of 26 can now save money for qualified disability expenses through an ABLE account. ABLE stands for Achieving a Better Life Experience. Kentucky's ABLE program is called Stable Kentucky and is administered through the Kentucky State Treasurer's Office. Let's look at some of the important features of the program you can find out about on their website, www.stablekentucky.com. The website will tell you everything you need to know about Stable Kentucky and also how to open an account. So looking up at the top of the page, you can see that you would open an account online. You don't go to a bank. You go to this website in order to open an account. So to find out more about stable accounts, you can just scroll through the page. So stable accounts give people with special needs more independence and financial security. What are the benefits? They're tax-free earnings. So earnings on savings are tax-deferred and tax-free when used to pay for qualified expenses. Financial benefits are not affected. So balances and distributions do not affect needs-based financial aid such as Medicaid or SSI. And participants can request their own stable card that can be used to spend money on qualified expenses. So who is eligible? You can click on, are you eligible? Take our quiz in order to make sure that you are eligible. Again, your disability has to have occurred before the age of 26, and you must have documentation that shows that. Stable accounts are not checking or savings accounts. They are investment accounts. They allow a person, their family members, friends, anyone, to contribute to their account up to $15,000 per year in 2019. And if you are employed and you do not participate in an employer's retirement account, you could contribute up to an additional $12,140 of income. You can only have one account, but again, anyone could contribute to your account on your behalf. There are 5 different investment options, including 4 mutual fund-based investments and 1 FDIC insured investment, and you have the option to change your investment choices twice every year. It would be very important for you to understand you have to use the money in your account to pay for any expense related to your disability. But that's not just medical expenses. Examples of things you can use your stable account for include basic living expenses, housing, transportation, education, assistive technology, employment training, personal support services, legal fees, health and wellness, financial management. And again, you could click here to learn more. If you still have questions, there is a telephone number, 1-800-439-1653, or you can email team@stableaccount.com with your questions. There's also at the bottom of the website a section for frequently asked questions or how to contact them. I hope this presentation has been helpful to you in understanding how you can go to work, still maintain an SSI cash payment, and have a lot more opportunities both financially and personally as you transition from high school into the adult world.